All right, let's dive in. Today, we're going to unpack a really wild day on Wall Street. It was a classic showdown. The unstoppable force of the AI revolution slammed right into the immovable object of geopolitical drama. So, let's break down what on earth happened. So, the day we're talking about is Wednesday, October 15th, 2025. And here's how things wrapped up. You can see it's kind of a mixed bag. The S&P 500 and the Nasdaq managed to finish in the green. The Dow, though, basically went nowhere. But the real story, the one you've got to pay attention to, is the Russell 2000. Small cap stocks absolutely soared, up almost a full percent to a new record high. That tells you that under the surface, there was some serious buying going on. Okay, so here's how we're going to break it all down for you. First, we'll look at the crazy ups and downs of the day. Then, we'll dig into what was actually moving the market. After that, we'll put 5 specific stocks under the microscope, lay out 3 different ways you could think about investing right now, and finish up with the one big takeaway you need. You know, tug of war is the perfect way to describe today. You had this incredibly powerful, positive news yanking the market in one direction, and at the same time, you had all these nagging, negative headlines trying to pull it right back down. And this is exactly how that fight played out. The market just rocketed higher right at the open, totally fired up by some amazing bank earnings and a monster AI deal. But then, around noon, things got really choppy. Some tough talk on US-China trade hit the tape, some big computer-driven selling kicked in, and boom, all the major indexes were in the red. But that dip did not last long. A huge wave of buy-the-dip money came rushing in at the end of the day, showing just how hungry people are to own stocks. And that's what gave us that strong finish. So let's get into the why of it all. What were these big forces that were pulling the market in opposite directions all day long? You can really boil it down to these 5 things. On the positive side of the ledger, you had the AI boom just continuing to roar, absolutely fantastic bank earnings, and a very friendly Federal Reserve. But pushing back against all of that good news was, you guessed it, the US-China trade drama. And then we had a really interesting wild card from a key company in the chip sector, ASML. I mean, just look at the confidence in AI right now. A group of investors, led by BlackRock, announced a $40 billion deal to buy a data center company. Let's be clear, this isn't just pocket change. It's a massive bet that confirms the AI infrastructure buildout is probably the single biggest story on Wall Street. And then you have the banks. Morgan Stanley just blew the doors off expectations. And this chart says it all, really. The experts thought they'd have to set aside about $97 million to cover any loans that might go bad. What did they actually set aside? 0. A big fat 0. That is a massive signal of confidence in the economy, and it really helped calm a lot of nerves. And throwing more gas on the fire was the Fed chair himself, Jerome Powell. With comments like this, he was basically telling the market, don't worry, we've got your back. He signaled more rate cuts are likely on the way, and even hinted that they might stop shrinking their balance sheets soon, which just means more cash for the financial system. For investors, that's like music to their ears. But, and this is a big but, here was the other end of that rope in the tug of war. You had President Trump threatening new restrictions on China, which immediately spooked the market. But at the exact same time, you had the Treasury Secretary kind of hinting that a deal could be in the works behind the scenes. This constant back and forth between public threats and private negotiations just created a ton of uncertainty, and it's the main reason the market took that nosedive midday. Okay, so we've seen the big picture. Now let's zoom in and see how all these huge themes actually affected a few specific companies. And first up, of course, is the day's superstar in the banking world, Morgan Stanley, which jumped almost 5%. And it's no surprise why. Their profits were up nearly 50% compared to last year, thanks to great results from their stock trading desk. But again, that decision to put aside $0 for bad loans, that was the real headline grabber. It sent a powerful message that things are good, and it helped lift the whole sector. All right, let's run through 4 others really quick. NuScale Power absolutely skyrocketed, up over 16% after the Army said it was going to start using their small nuclear reactors. Bunge Global, an agriculture company, jumped almost 13% because traders were betting it would benefit from that cooking oil dispute. ASML, which makes the machines that make the chips, was up almost 5% because their new orders were way better than anyone dreamed, proving that AI demand is still red hot. And then you've got NVIDIA. Even though it got a record high price target, the stock basically finished flat, a perfect example of a company caught right in the middle of that AI optimism and trade war pessimism. So when you see a market getting pulled in so many different directions, you have to ask, what is an investor supposed to do? Well, that brings us to three very different paths you might consider. Okay, path number one is the AI is everything bet. You believe this tech revolution is the only story that matters. If that's you, then a name like NVIDIA is your focus. Path two is a bet on the whole economy getting stronger, thanks to the Fed keeping money cheap. In that world, a company like Morgan Stanley, which does well when the economy does well, makes sense. And then there's path three, the defensive play. If you're more worried about the geopolitical risks, you might look for a safe haven hedge, like a gold ETF. Three very different strategies for three very different views of the world. All right, let's pull all this together. When you boil it all down, what are the two competing stories that are really driving this market? At the end of the day, this market is telling it two completely different stories at the same time. The most positive story, the bull case, is that solid company earnings, a truly game-changing AI cycle, and a helpful Fed are creating a strong bull market that's built to last. But the most negative take, the bear case, is that all this excitement is just papering over some really big cracks, a fragile market that could be shattered by a trade war, hidden dangers in the credit system, and, frankly, a massive bubble in AI stocks. And, that negative view was summed up perfectly by JP Morgan's CEO, Jamie Dimon. He was talking about a few recent bankruptcies and used this pretty chilling line, basically saying that the few little problems we're seeing today might just be the sign of a much bigger infestation hiding in the walls. So, as we wrap up, that leaves us with two huge risks that you absolutely have to keep on your radar. First, the risk of a real, full-blown trade war, where all this tough talk turns into actual policy that messes up global supply chains. And second, that cockroach risk, the idea that the credit problems we see now aren't isolated incidents, but the beginning of something much, much worse. And that really brings us to the ultimate question. The market is stuck between the incredible, world-changing promise of AI on one side and the very real and growing risks from geopolitics and the credit markets on the other. Which one of these powerful stories is going to win this tug of war? That is the question that all of Wall Street is trying to answer right now.